Hey there, fellow traders. Welcome back to Insider Financial. I'm Alex Carlson, and in this video, we will recap the day's stock market action and discuss our game plan for tomorrow. But before we dive in, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. After you sign up with your email, you can then sign up with your mobile number. Text messages are the fastest way to get our alerts, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you'll get a welcome email, which includes a free copy of our ebook. Our ebook, our email service, and our text messaging service are all free service from Insider Financial. We don't run any Telegram groups, Discords, or paid subscription services. Well, guys, U.S. stocks on Wednesday ended lower, though a late upward push in the session helped the three major averages end off the session lows. Rate-sensitive growth stocks took it on the chin, and bonds sold off following hotter than anticipated retail sales data. The report also led to market participants further lowering their expectations for a 25 basis point rate cut from the Fed as soon as March. The tech-heavy Nasdaq lost ground by 0.59%. The S&P 500 extended its 2024 losses, falling 0.56%, and the Dow declined 0.25%, with losses in blue chip index capped by a rebound in Boeing and a rise in United Health. All 11 S&P sectors closed in the red, with real estate and utilities the top losers. Sentiment on Wall Street was already negative from Tuesday, as investors digested comments from European Central Bank officials and Fed Governor Christopher Waller that pushed back on rate cut expectations. On Wednesday, the U.S. Census Bureau said that retail sales in December rose 0.6% month over month, higher than both the consensus estimate of plus 0.4% and November's plus 0.3% reading. Similarly, core retail sales came in higher than anticipated. According to the CME FedWatch tool, the odds of a 25 basis point rate cut by the Fed's Monetary Policy Committee meeting in March has now dropped to around 58%, compared to around 63% a day ago and around 65% a week ago. Treasury yields jumped as bonds sold off after the retail sales data. A poorly received $13 billion 20-year bond auction also weighed. The shorter end, more rate-sensitive 2-year yield showed the biggest reaction, rising 12 basis points to 4.35%. The longer end 30-year yield was little changed at 4.31%, while the 10-year yield was up 4 basis points to 4.10%. Markets continue to discount early rate cuts, but central banks are pushing back against premature cuts and stressing the data-dependent approach. Long-end rates continue to drift higher and curves are steepening. The U.S. 30-year is back to where it was before the December FOMC meeting. The 10-year was at 4.15% then, which represents a reasonable tactical target to aim for. Today, we also had the Fed's Beige Book, which showed regional activity, showing little or no change in activity in recent weeks for most of the central bank's 12 districts. And if you look at the charts, the SPY, if you follow FinTwit or you're looking on Twitter, you would think the market's down 30% right now. But we're just fractionally off the highs, off this 480 here. We're at 472.29 on SPY. QQQ 412.92. We're at 407.21. Small caps, again, IWM has gotten hit the hardest. This is what happens. It's, guys, the overall market is so important. You're asking, well, if we're trading small caps and penny stocks, why are you talking about the overall market? Why are you talking about interest rates? Well, it's the tone. It sets the tone for is there going to be bullish enthusiasm, across the board, or are market expectations going to be muted? And that's what we're seeing right now. We're not seeing the big moves. And that right now, this is a time to be cautious. And right now it's just a day by day thing. I mean, I think that's all you can do if you are active in the markets. Just take it day by day and wait for the markets to really get hot again. And we will know when that happens. But right now, we're just taking it day by day here at Insider Financial. Tomorrow at 7:30 a.m., Atlanta Fed President Raphael Bostic is scheduled to give brief remarks on the economic outlook before the Metro Atlanta Chamber Board of Directors meeting. Again, Fed speak is so important because this sets the tone, and right now that's what we're focused on. On Friday, we're getting earnings from Ally Financial, Comerica, Fifth Third, and Travelers. Again, earnings season is kicking off. We had the big banks on Friday. Major brokerages reported on Tuesday. Tonight we had Alcoa. So again, we'll be watching these reports for the overall health of the economy. Are we going to get a recession, soft landing, hard landing, etc.? And then on 10 a.m. on Friday, we get the December existing home sales report will be released. Economists expect a print of 3.84 million home sales versus 3.82 million in November. And then also at 10 a.m., the January reading of the Michigan Consumer Sentiment Survey will be released. In terms of small caps, S3 Partners issued a new U.S. short interest recap today in which it broke down which stocks may have some short squeeze potential. S3 looked at stock borrow rates to see how crowded a shorted stock is relative to the number of shares that are left to borrow to put on new short positions. They noted that the higher the stock borrow utilization and stock borrow rates, the more expensive it is to short a stock. That could lead to some short covering if sentiment shifts. The S3 Partners said short sellers need strong short side conviction to keep a short position open when their alpha is getting eaten away daily, even on weekends. The 10 stocks with the highest stock borrow rates that have short interest outstanding of over $25 million are VinFast Auto, VFS, BYND, Beyond Meat, RILY Financial, RILY, FRHC, Freedom Holding, Cassava Sciences, SAVA, Sirius XM Holdings, SIRI, IBRX, Immunity Bio, GLP, Global Partners LP, SLNO, SLNO Therapeutics, and HUT8 Corp, HUT. Three small caps that I want to highlight, I want to put on your radar that have major insider buying. First up is MRAI. We've been having a lot of insider buying. We just mostly seen the CEO. He just bought $1 million worth here at 92 cents. Director buying at 92 cents, 92 cents. The CEO, he even bought it at $1.97. This was back in December. Director bought it at $1.97. So we've had a lot of major insider buying from the CEO. Stock closed at 84 cents, but we're trading $1.24 in the after hours on this filing. Stock has just a $6.6 million market cap, 4.8 million shares in the float. Insiders own 38%, and they're buying this stock up. So put MRAI on your radar screen. Opco Health, OPK, led by billionaire Phil Frost. At some point, I think he's just going to buy the entire company. I mean, this guy has just been nonstop buying this stock. I mean, look at all. I mean, it's just all red. Insider buying last year, $1.18, $1.81, $1.84, $1.82, and then recently buying here at 95 cents. So again, he's been buying it every dip, nonstop. Has a $762 million market cap. The guy's a billionaire. He could buy the entire company if he wants. I think this is one put on your radar screen, OPK. Lastly is CELU. This one here got a lot of insider buying, 10% owner. Just recently, January 12th, he bought $5.3 million worth at 25 cents. CEO was buying last year at 16 cents, 17 cents, $1.4 million buy, $1.5 million buy. Stock here, look at this, 18 cents, trading 25 cents in the after hours. I think this is one can put on your radar screen. Again, these short squeezes, the way it works is, put them on your radar screen. You see it, news, catalyst, sentiment shift. That's when you can jump on it. But don't go dip buying these short squeezes. It's not going to work. You need a catalyst. You need that momentum. You want to be buying higher prices, not lower prices. And in terms of these insider buying, I think this is a safe spot to be. Again, none of this is financial advice. If insiders are putting $1 million on the line to buy their company stock, that tells you they really believe in it, and chances are maybe they know something. So there's a reason they're making that type of investment. So I think these are plays that you can focus on right now. Again, it is a tough market, and I can't stress, just be cautious right now. Don't go chasing many of these plays right now are one and done. It's a tough market for small caps. We saw that this week with, PHUN, DATS, MARK. I mean, they had big runs, and then they go and, PHUN and DATS, they go and hit their shareholders with an offering and dilution, and the stocks come right back down. It's really criminal what some of these companies do. Today we had MIMO was a big runner, but again, it opened at 26 cents, ran to 42 cents before closing at 22 cents. So, again, unless you were trading in and out, most likely you lost money. So again, just be cautious, guys. It's a tough market. And at Insider Financial, what we're trying to do here is put stocks on your radar with potential outsized moves. As I repeatedly stated, there are always opportunities in the markets daily. There are. You just have to be very selective, and if you don't see anything, don't have to do anything. And the important thing is identifying which stocks to be in to grab that money. The key is trading red, not green. We're looking for those momentum plays that have catalysts. It's all about finding momentum before it happens and riding that wave. That's what we're doing here at Insider Financial. Remember, cash is a position, and it's conserve cash and wait for that right opportunity. And to get our small cap reports, we cover low floats, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks, and insider buying. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at Insider Financial and unsubscribe. And remember, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for joining me today on Insider Financial. Hit that subscribe button and ring the notification bell to never miss the latest insights and strategies. Until next time, happy trading. This is Alex Carlson signing off. Bye-bye.